Hey folks, and welcome to the Pipnotic Symposium for the 2nd of August 2024. Today we are going to look for, we're going to talk about liquidity exploration because it's pretty fundamental in relation to trading, because essentially, prices are moving up and down, and they stop going up and start moving down, which is essentially what a trade is when price meets liquidity. And it's this price being matched with liquidity at specific price levels that causes prices to move. So I thought that we would dedicate a session on this. And one of the main things that we need to be mindful of is that if you have a turning point in price, we can just use this one. Prices go up, down, and down. The reason prices turned here and prices turned here is because because price met liquidity in whatever form it had at the time that price went there. And typically this doesn't look like selling. This looks like maybe profit taking. Just the way that these candles are forming. Selling is more forceful. Profit taking is kind of a more gradual decline, like an easing out of the market. Then again, getting out of trades is buying and selling. But this is more getting out of a long trade than it is active selling, where this is different. And the reason I say that is two things. Number one, prices turned. Number two, that this high is higher than this high. And this tells us a lot. Sorry, kids upstairs eating and throwing stuff around. This tells us a lot about the intention. And when you have extreme highs, which this is not an interesting high, but let's assume that we have something like that, where prices go like that, prices come down, we move below here, and we move up. When prices get close to this price point here, there's a very high likelihood that prices are going to turn. And the reason this is the case is because, well, when prices were here before, we were able to move below this low. And second of all, this would be just an optimal place to get in. And the software will find like a zone like this, and it'll mark it on the charts, and this is likely going to be one of those zones that you can see just here. Another thing that is worth noting, that if there's a substantial order that is on the books of the banks, maybe it's not enough to allow price to move here. Maybe prices have to move a little bit higher, even above this high here, before we satisfy the requirements for that order, which will in turn cause prices to move down. And so it's super important to try, where possible, to put your entries at places where prices move below. And here we had a low, and notice that prices went just to it, and this is where they turned around from. And did they keep going? Yeah, they kept going. We can't really gauge the value of that pattern when it's squashed out. So if you go like that, then you can see here. But we had a low just here, and prices went down, but they did not close. Okay, they tested the zone, this little area, and they turned away. And the reason for this is that we have pancakes just here. Okay, we have a lot of pancakes nested in here, and then price starts to eat away at those pancakes, pulls liquidity, and this is what causes price to turn higher. So in a situation like that, where you have a low, okay, price goes to the low, it retreats, and then we have another push below that low. This tells us that something in here is interesting. Okay, and the reason we know that is because prices turned from that, and they had to seek a little bit liquidity below this here by going beyond that price point, because this is typically where most common traders are going to have their stop losses placed. And so when prices come down here, they're going to be met by liquidity, and maybe liquidity here is enough to facilitate the filling of the order that is required to cause prices to move away, which is the one that I referred to as being on the bank's books here. And this is common because, I mean, here we have many different types of orders. We have stop loss orders, we have sell stops. I mean, there are all sorts of market participants willing to get in and out of a trade at these levels, like the one you can see here, be it a stop loss or be it a sell stop in this situation here. Okay, and so this is just telling us that the extended move below this low here, it's telling us that we found liquidity here, and this is likely a very decent area, despite the fact that it looks a little bit strange. But if you in fact look at this, let's have a look at it. The fact that we had the price come down, and we had prices come up and close, this is kind of clearing the book here. Price opens, we go down, we go below the low here. As a matter of fact, we go below this low here, and which on a small time frame could be some kind of a swing point, a pattern of sorts. Price comes up, and then we close up. We go all the way up here, and we close, and then we have another run, and here we go below. And this is the candle here that is telling us is telling us that prices are likely going to turn, because we had a huge wick here, a big shadow on this candle. Prices went down below here, and we closed up here. I mean, that's a lot of buying, and so this is a clear indication that there's a lot of buying pressure here. And so what you can do is that you can wait for prices to come to that price point later. So assuming that you were watching this area and you were looking for confirmation this area is going to hold, I mean, this candle here is pretty much telling us that we're likely going to hold. We had a push below, we created a new low, lower than all of the ones in this area of accumulation, plus we went below here. So when prices come down, we open, we go up, we go down, and then we close here. This is an indication that prices are likely going to move higher. And you can position yourself however you like. Some people would like to trade this pattern on a smaller time frame, which is perfectly fine. If we just mark this off, so a bit of a train station here. So going down here, let's let that click on. Actually, we're going to leave the software off. We're just going to go back to it so I can find it. Here there's no data, so we'll stay here. So prices pull back and then we leave. Okay, so this is a super clear indication. Let's find another example. Let us have a look at this here. So here you can see that the highs are moving higher, and we left, up, lower low, move up, we go here, and we move up. And notice in here that we are maybe a little bit higher than we were on this one here. And this is interesting because, again, we have these patterns occurring where we have prices kind of moving up above this high here. So these are the sell zones. This is a sell zone marked off. This is the sell zone. This is actually the top of this area, this micro area of supply here. We have a parent, we have a child. Prices came up above the top of the child. We're showing a bit of weakness in this zone here, and then prices slowly started to gravitate in the direction of the thinnest liquidity, which was higher. We moved above, which was here, and this is where we found liquidity. But note, we went down here, and this offset the balance, and so prices were strong enough now to continue to move higher. So we challenged this little area, which is a child on the 4-hour chart. We moved away, and we went higher once again, which is an older child here, supply and demand on the 4-hour chart, and then prices moved away. This candle here is the one that did it, and so any attempts to trade up into the wick on this particular candle here is fair game for selling, because it's not likely that prices are going to go above the high here. As a matter of fact, it's not likely that prices are going to come much higher than this wick here. Maybe a little bit, as they did here. And this candle here kind of went down a little bit further. And so this might be one of those trades that you get stopped out the first time, but then you gradually manage to make in, and then we start to see price break down and move away. Let's find another example. Here we have another one where we had a zone just here, and so here we had this is the sell zone, sorry, the buy zone just here. Put it in a different color so it's clearer. Just here. Okay, so we got empty space right here. This is kind of the edge of this area here. So we have empty space here. So this is a zone. This is the buy zone. Just here for this area of demand. Okay, and notice when prices came down into this the empty space, kind of halfway through the buy zone, halfway into the buy zone, we moved away. And so that is telling us that should prices move below here and gravitate towards this area of demand, that there's a pretty high likelihood that prices are going to move away. Okay, so prices came down, we moved into this area, we moved back, we closed, we opened, we went all the way down, we went all the way up, and then we closed here. This candle opened, we went down, we went up, we went down, and then we closed. And this one opened here, we had a push low, and then we snapped higher. Okay, so all the fact that these candles did not close below kind of this line here, they're respecting whatever price that is. This is telling me that we are loading the boat and we are offsetting the imbalance in supply and demand to the advantage of the demand. Okay, so it's really important to take a look at these things. And here we have the same thing where we had a zone just here. Okay, here we have the gap between the lowest edge of the zone and here, which is right there, and prices moving up into that area. First here, and then here, moving down, and then having another go, and then finally moving. Oh, like a circus today. Lots of kids running around, floating up mattresses and whatnot. All right, so we moved above here. Okay, the sell zone was established right here on this candle. We moved deeper yet. We tried, we had a sell zone for this zone here, a little bit deeper, and we finally managed to move up here, and we actually poked up into the middle of this area of supply, and this is where prices moved away from. So try and follow along with the narrative in this zone. As you can see here again, we have a low, low, lower low. When you see these lower lows, and this is price seeking liquidity. Super important. And when you see price move down into a zone and then begin to close like this with a decent wick below, I mean, this is really clear, and this is probably going to provide a pretty decent area of supply. Demand in the future around here somewhere. Yeah, so prices move away. Let's find another example. Okay, here you can see the fact that price formed this low, a lower low, a high, a lower high, a low, a higher low, and then price moved beyond this area just here, and we left below, we moved below. That's telling us something about this area here. And so what we want to see is we want to see this price be violated by a zone, because this is a strong area, because we were able to drive prices below here, and we actually moved down kind of to this zone here, which is going to be a 4-hour zone. So prices poke down into here, and I actually like when we have a zone, price moves up, and we consolidate away, and then we kind of attempt to move lower. And these are really good entries, because we know that if price moves below here and here, it's going to be met by buying. And so once price finally moves into this area of demand, which it doesn't always do, there's a very high likelihood that prices continue higher, and they do so with force. And so if we have a look at an example, we have, this is not a beautiful example, but I'm going to show it anyway. We had a zone like this. I think we could probably do it like that. Like so. Okay, and here we had a low. We actually just had this. Price is moving sideways. Okay, and so notice we had a low, a low, a low, and equal or lower low, and then prices started to make candles like this. This is telling us that we have offset, we have created an imbalance in supply and demand. Then we have this one here. This is a nice push away. Prices move up. They form this zone just here. We test the zone, okay, and then we start to move through it. Note that we had, this isn't a zone, but on a smaller time frame it probably is, but we had something in here. Because there's a big wick, I'm just going to mark it off like that because I know there's a zone in here on a small time frame. Okay, so we formed kind of the sell zone. There isn't really a clear sell zone until we get here, but then prices have already met that zone just here. So this is not a beautiful area at all because prices, these candles were able to kind of trade back up into that. And you can see that with the wicks. Price came down, we tested here. We started to shift. You can see all white candles. We moved above here. Okay, this was the sell zone for this candle, but it's not really sell zone because this candle and this candle, they kind of overlap. Okay, so which is telling us that we have an area here. Prices go down and they go up and then they go down. Okay, and so this area, this price inefficiency has been addressed on a smaller time frame. You just can't see it on this time frame. Prices go up, they slowly start to break down. We snap down into this area here. We go all the way to the low. Okay, and then we close and we look like that. Close, and we do not move beyond that candle there. So this would be an interesting place to get in to the trade, either a market or to buy stop, buy limit, sorry, and the stop would be below here, and it would look something like that. And you either click in here, or you wait for a test to occur at a later time. Okay, none of these run forever. This one tested a few times, but none of them run forever. So you have to be very careful of that and patient. Okay, good. Well, I'm going to wrap it up for this one. This is just some examples. I'm going to find more of these later on. If you have any questions, let me know. Thanks for watching.